Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes strange language of corporate filings. Today, we're diving into a report from Plus Therapeutics, and trust me, with talk of equity lines of credit, you might need a decoder ring just to understand it, but don't worry, we'll break it all down. Ever wonder how a small biotech company plans to keep the lights on and their research going? Plus Therapeutics just made a deal that could give them a lot of cash, but it might come at a cost to current shareholders. Let's get into the details. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. On its report dated June 17, 2025, Plus Therapeutics announced they've entered into an agreement that allows them to sell up to $50 million worth of their common stock to Lincoln Park Capital Fund. Think of it like a company having a credit line, but instead of borrowing money, they're selling shares of their company over time. The meat of the deal is wrapped up in something they call a purchase agreement. Basically, Plus Therapeutics gets the right but not the obligation to sell shares to Lincoln Park, and Lincoln Park is obligated to buy them up to that $50 million limit. This isn't a one-time dump of shares, it's spread out over 3 years. Now, there are some rules. The price has to stay above 10 cents, and the company can only sell a certain number of shares at a time, about 300,000, an amount which can be increased based on the price of their common stock. They call this a regular purchase. There are also accelerated purchases. Essentially, if Plus Therapeutics wants to sell more shares quickly, they can, but the price they get for those shares will be a little lower. Think of it like a flash sale where you discount items to get them sold faster. These accelerated purchases let Plus quickly sell more based on how much their stock is traded that day. The price for these shares isn't fixed. For a regular purchase, Lincoln Park will pay 97% of either the lowest sale price on the day of purchase or the average of the 3 lowest closing prices over the previous 10 days, whichever is lower. For the accelerated purchases, this rate drops to 96.5%. It can get a bit complicated, but the main thing is that Plus Therapeutics doesn't know exactly how much money they'll get per share until the shares are actually sold. Here's where it gets interesting for current shareholders. Plus Therapeutics can't just keep printing shares forever. They need stockholder approval before they can issue more than about 10 million shares, which is almost 20% of their existing stock. There's a loophole though. If the average price Lincoln Park is paying is high enough, above roughly 36 cents per share, then they might not need that approval, but that is not granted and the company will still most likely require approval from its stockholders. There's also a side letter concerning some warrants issued earlier in the year. It sounds like Plus Therapeutics is making a deal to buy back shares and warrants they previously issued. To do this, they'll use 90% of any cash they raise after this month to pay these holders 11-15% of what their securities were worth. It's basically like saying, oops, we need those shares back, we'll give you a little extra to make it worth your while. The total amount is about $17.3 million. Essentially, a big chunk of the money raised from Lincoln Park will go towards buying back those warrants. So what will Plus Therapeutics do with the money aside from buying back warrants? They say it's for working capital and general corporate purposes. That's business speak for running the company and funding their operations. The filing makes note that they are expected to repay warrant holders as part of this deal. To keep things simple and straightforward, Plus Therapeutics also agreed not to make a similar deal with anyone else. Lincoln Park also promised not to engage in what is called short selling or hedging the company's stock. Lincoln Park is barred from betting against Plus, which could give some stability to the stock. Of course, Lincoln Park isn't doing this out of the goodness of their heart. Plus Therapeutics is paying them a commitment fee. The first payment is $500,000 and they'll get another $500,000 if Plus Therapeutics sells over $25 million if Plus Therapeutics decides to sell them. The good news for Plus Therapeutics is that they can terminate the agreement at any time without penalty. But during any event of suspension, Lincoln Park can't cancel the deal, though Plus Therapeutics can't force them to buy shares either until the problem is fixed. Now let's talk about what this all means. Plus Therapeutics is essentially banking on their ability to raise capital by selling stock. This can be a lifeline for a company that needs cash, but it also dilutes the value of existing shares. It's a balancing act. If the stock price stays low, Plus Therapeutics might have to issue a lot of shares to get that $50 million, which could hurt existing investors. On the other hand, if the stock price stays low, Plus Therapeutics might have to issue a lot of shares to get that $50 million, which could hurt existing investors. On the other hand, if the stock price goes up, they can raise the money by selling fewer shares, which is better for everyone. The dependence on using more debt to return prior warrants Also indicates that the company might not currently have the financial fitness it presents and depends on future performance to return these debts. Plus needs to make sure that any money raised via selling stock needs to turn into progress in their pipeline so that the return can be used for general operations and not debt repayment. Is this a good deal for Plus Therapeutics? It depends on their ability to use the money wisely and on how their stock performs and of course the long-term future of the company. It's a high risk, high reward situation. Alright, that's our breakdown of Plus Therapeutics' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.